Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I have something very exciting for you, probably one of the most important videos that I've ever made. And I'm going to share with you, I don't know, 9 or 10 reasons why gold mining stocks in particular, as a whole, are as attractive and as smart of an investment that anyone could make right now. Now, this is not investment advice. Don't buy, sell, adopt a puppy, do anything based upon the information that I'm about to share with you. But I am feeling like everybody right now. Today's October 1st, 2021. The gold mining stocks have been obliterated. Okay. I think for the year, the GDXJ is down like 30-ish% from its high. It may be down like 40%. My portfolio, because of some trading that I've done during the course of the year, is down a little less than 10%. So for that, I'm grateful, but I am far, far from what I would call my high water mark. And I imagine that most of you that are watching this are invested in gold mining stocks, and you may be in the same boat. But I really believe there are some super positive factors that make investing in gold mining stocks right now what I would call an asymmetric trade, meaning the downside risk, and there is downside risk, no doubt about it, but the downside risk is far, 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 maybe by a multiple of 5 or 10, far outweighed by the upside potential that we have in gold mining shares. We are at historical lows. Okay, so without 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 any further ado, let me start going through my list. So grab your coffee, sit back and relax. I've done all the work for you. Now you get to get a comprehensive list of why gold mining stocks are such a great opportunity right now. Number one, in no particular order, the ratio of when you compare the price of gold to the gold miners index, that ratio has never been skewed so far in the direction of gold miners being cheap relative to gold. It's again at historically low levels. So when you compare the gold mining index to the price of gold, it's off the charts in favor of it. You know, if it were to improve, it would be a great thing for the gold mining stocks. Number two, gold miners relative to the S&P 500. Again, near historic lows. When you compare the value of the gold mining indexes to the value of the S&P 500 on a historical basis, I mean like decades back, as long as there's data available, that's also at historic levels. And again, any improvement in that would be a vast improvement for the gold miners. If you compare the miners to anything, and I mean, if you compare them to a tech stock and you compare any financial ratio or metric, price to sales, enterprise value to this, cash flow to this, whatever it is, these gold miners, and a lot of them are profitable companies right now. They're just, I mean, they're just any of these financial price to book value, okay, price to the net tangible assets. You can buy a lot of these miners right now for a price at a market cap that's less than the net tangible assets of the company. It's incredible, okay? The other factor to remember is, and I'm going to kind of shift gears here a little bit. People are liking to compare the current gold price environment to around that 2013 timeframe, I think it was, when gold kind of hit a big high in 2011 and then tanked, like went from like 1800 where it is now to about 1100. Things were different then, okay? Number one, in terms of the miners, if you compare the miners today, they have little debt, almost no debt in some cases, or no debt, but even in the worst case scenario, the balance sheets today of these gold mining stocks are way, 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 way better than they were back in 2013. Back then, these companies were levered up, meaning they had a ton of debt. They'd done crazy acquisitions at high prices. So of course, when the price of gold fell, these companies were in danger of going bankrupt. Well, today, most of these companies have like very little debt or zero debt and have not done crazy acquisitions. The acquisitions that are going on, like this Kirkland Lake, Agnico Eagle, are done at like market value. So there's the financial shape of the companies now is there's no comparison. Okay, and prove me wrong if I'm wrong, but there's no comparison. So the risk of, if gold were to drop to 1,500 an ounce, well, that would stink. However, it probably wouldn't put most of the big gold mining companies at immediate risk of going bankrupt. Whereas back in 2013, when that gold price dropped, suddenly these companies had all this debt. So they, were at risk of defaulting on debt and going bankrupt, which is why back then we saw gold mining stocks drop in many cases. I think the GDXJ dropped like 80%. So anyway, I've gone on a little long on that point. So let's move on to the next point. Just on a macro level, comparing now to 2013, back then the dollar was at lower levels, much lower levels, I think almost 20% lower than where it is now. So the dollar is, I'm not going to say sky high right now, but it's already strong relative to the other currencies. So the risk of it going higher, which it could, is not as great as it was back then. And when the dollar goes up in value, that's usually a bad thing for the price of gold. However, you have to factor in that there's been a ton, and again, if you compare now to back then, the amount of money printing that's gone on in the last year and a half. Sure, there was some money printing back in 2008, 9, 10, 11. However, the amount of money printing that's gone on this time dwarfs what we saw during that period. And in regards to how that affects the dollar, well, it's not just the dollar, it's the euro, it's the yen, it's the yuan, it's every major currency. They've just printed. So back to the strong dollar thing. Well, sure, the dollar's strong, but it's strong relative to a bunch of other currencies that have also printed a ton of money. And, at some point, all of that money printing is going to flow through, and we're seeing that already with inflation, but it's going to flow through potentially, and I think even into the price of gold. So, just comparing the value of the dollar, that's always, got to remember, that's always relative to other currencies. It's like they're all printing. It's like, it's like you're in the middle of the ocean and there's 6 ships, they're all sinking. There's the US dollar ship, there's the euro ship, there's the yen ship, the yuan ship, the Canadian dollar ship, all these different ships, they're all sinking. Which one's sinking at a slower rate? And right now, that's the US dollar. Yet again, I went on a little long on that point. The other thing we need to remember now, as compared to back then, the national debt, I don't know, 30 trillion now. I don't know what it was in 2011. I'm too lazy to look it up specifically for you, but you can look that up, and I would imagine it was at most maybe half of what the national debt is now. They can't raise rates. 30 trillion in debt. You've heard this before, but you can't, 30 trillion in national debt. Look at all the debt that the corporations have, municipalities have. If rates go up at this point, nobody can service the debt. Nobody can pay the interest on the debt that's owed at a higher interest rate, at 3% or 4%. It just mathematically can't happen. There's all these comparisons, but I think the easiest one is if you look now at $30 trillion in U.S. debt. If rates were to go to 5%, that would be 1.5 trillion per year in interest expense. That would be more than half of the national income, of the national budget, however you want to say that. And the other factor is our deficit. So we have the debt, which is our accumulated money that we owe, and then you have the deficit, which is on an annual basis. Are we spending more money as a country than we're bringing in? Oh, yes. And the deficit is way higher now than it was relative, to back in 2011, 12, 13. Inflation. Inflation's much higher. It's been discussed ad nauseum. However, when you compare inflation today to where it was back in 2013, 11, inflation, we actually have inflation now. And what's officially reported and what most people think is the actual inflation number, it's no matter how you look at it, inflation is much higher. The other thing I'd say is the last 2 points is there's just a lot of weird economic stuff going on, which makes sense because the economy and the markets have been so perverted by all this kind of central bank manipulation and control, supply chain issues. I don't know. China seems to be like, I don't know, it seems like they're almost purposely trying to sabotage us, if that makes sense, with like factory shutdowns, and there's power, energy shortages. I don't know. Sometimes I went to Walgreens the other day by my house here. There was seemed like it reminded me when I was in Budapest, Hungary in 1990, which was a communist East Bloc country. It's like half the shelves were empty. It's just getting really, really weird. Okay, my final point, and I apologize for the changing lighting conditions. I have a cat that is walking in front of my lamp, so I apologize if there was a little visual disturbance there. The last thing I want to talk about quickly, and this is kind of a separate note, is Bitcoin. And just a thought I have, and I invite everybody to prove me wrong on this, but it's a thought that I had about Bitcoin that I haven't heard anybody bring up. What I have heard people bring up is that from a cryptocurrency, and I'll just lump them all together, cryptocurrency perspective, that there's all these, what's the difference between crypto and fiat? There's all these cryptocurrencies. There's, I don't know, I've heard 5,000, 8,000, 11,000, who knows how many there are, but there's a lot of them, right? And there's nothing stopping anyone from making more cryptocurrencies, which as a whole would be dilutive. It'd be the equivalent of printing money to the cryptocurrency universe, right? Right, because the more there are, the more diluted basically the value of cryptos become. Here's my thought. See if I can convey this to you. I was thinking about other electronic innovations that changed the world, and the one that came to mind for me was email. And what did email do? Okay, I'm 51 years old. When I was 18 years old, if I wanted to communicate with somebody, I'd either call them on the telephone, landline, or I would write a letter, right? Well, email came along, and it basically, what it did was it replaced paper, right? It replaced instead of writing on a piece of paper, putting in an envelope, putting a stamp and sending it, I would type it on the computer and press send. Basically accomplishing the same thing, but much quicker. The email was basically an electronic form of paper, right? And I thought about that with cryptocurrency. Like, isn't that what cryptocurrency is? Like, it's replacing paper money. And if it is indeed just replacing paper money, isn't that what kind of the problem is with the argument people make with countries devaluing their currency? They quote unquote print money. It's the same thing with cryptocurrency. It's just replaced paper, but you can still print as much of it as you want to, right? I mean, and I even heard somebody say about Bitcoin that what's to keep somebody from duplicating the code they used for Bitcoin and making Bitcoin 2, and then duplicating that code and making Bitcoin 3. Look, I'm no crypto guru, so in that regard, I have no idea what I'm talking about. But just to me, on a kind of a basic level, that made sense, at least temporarily, in my mind, that with these cryptos, which are a competitor to gold and silver, okay, all you're really doing is replacing paper money. But paper money was the problem, right? Paper money, because it can be just printed. That's, it's not replacing real money. It's not replacing things that have a finite supply on planet Earth, like gold and silver. It's not replacing that. It's replacing paper money, and paper money can be printed ad infinitum and to infinity and beyond. So anyway, just my thoughts. I appreciate you watching. I do believe this is a historically low time for gold mining stocks. And, um, sure, the gold price could go to $1,200 and the GDXJ could go down another 15%, 50%, who knows? But I just think that when you look at all the factors and the fact that things are moving much quicker now, it presents what I think is an attractive opportunity. Thank you for those few of you who have hung on through this whole thing. Thank you for watching. If you enjoyed my video, of course, you can subscribe. If you don't like it and you had subscribed previously, I think there's a way to unsubscribe. You could share it. And I hope you have a great day, and we'll talk to you soon.